Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The great thing about owning dividend stocks is it gives you a payout monthly or quarterly that you can count on year after year if you're investing in a really good company, a company that's growing its dividend. And higher interest rates have actually led to higher dividend yields for a lot of dividend stocks. One of those that has risen to a very high level is Verizon, currently paying a dividend yield of 7.9% as I'm recording. So if you want to get a target of $10,000 per year in dividends from Verizon, how much stock do you need to own? That's what I'm going to get into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And to just cut right to the chase, to get $10,000 per year in dividends from Verizon, you need to own $126,103 worth of the stock. That is 3,761 shares. But there's more to it than that. This is the snapshot of Verizon. This is the dividend yield. You can see this in the top right corner, and you can see the stock has dropped. The impact on the dividend yield is when a stock drops, it actually makes the dividend yield go up. But what we want to look at is what this payout is and what percentage of the company's earnings are being paid out in the form of a dividend. You can see in this chart, this is the dividend yield just rising really sharply since 2021 when it was about 4.4% to now nearly 8%. But this is what's worth highlighting. This is the dividend payments that Verizon has made over the last 20 years on a per share basis. Going back to 2004, the company paid a 39-cent dividend per share. Now that payout has more than doubled over the past 20 years. So not only would you get about a $10,000 dividend if you own that many shares, that dividend payment would grow on a per year basis more than likely. And this is actually a pretty healthy dividend payout ratio. I'll highlight this. In the purple line, what you see is the dividend payout ratio. Let's go to just the last 5 years. You can see that the percentage of Verizon's earnings that they're paying out in dividends is only about 50%. So that leaves a little bit more money to do things like pay down debt, reinvest in the business, and grow. So pretty solid trends for Verizon as far as the payout ratio goes and the growth in the dividend long term. Now, there are, of course, questions about Verizon's operations going forward. The company does have a lot of debt. Cash flow was really under pressure over the last couple of years as it invested in acquiring spectrum and building out a 5G network. But I really think the company's in a much better financial position today than it's been in quite a while. Free cash flow has increased pretty significantly in the last couple of quarters as both spending has gone down and cash from operations from the business itself have gone up. There's a lot of growth potential in things like fixed wireless, in selling streaming services. And one of the benefits, if you are a dividend investor, is that you get this really high dividend yield and likely a payout that will grow over time. So the big takeaway here is if you're looking for about $10,000 in income per year from Verizon's dividend, you need to own about $126,000 worth of stock. That is a lot of stock, but also a very big payout for investors who are looking for that dividend payout. But what do you think about Verizon right now? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.